Welcome to today's session. Welcome to today's session. Back to SNDK. This was the last trade on Friday, day trade on Friday. So basically, what I plan to do today is to start developing a strategy for reversal. Now, that strategy is called Mountain Pass. It was a strategy I learned from one of the platforms I subscribe to, my mentor. So basically, what are we looking for? There are three key things you look for when in a trade. You look for a good entry. Your good entry is key. It's paramount. It prevents you from chasing the stock. Once you get your entry wrong, now it becomes a chase. Once you get your entry wrong, your stop position is compromised, your risk reward is compromised, your ability to sit out the trade is compromised. So I will create another video that shows the entry depending on the strategy. We have a strategy for entry on the 5 minutes opening range breakout, and the strategy for VWAP breakout, and entry from VWAP breakout strategy, and the entry from high of the day trading strategy, then and the entry from VWAP bounce strategy. Now, another strategy I'm looking now is a reversal. When you have a good entry into a stock, what do you see that makes you hold the stock? And when do you really get out of the stock? That is what determines whether you'll be consistently profitable or you'll be losing money. When I say losing money, you can be making money, but you're making less than you're losing. You're losing more than you're making. So today we're going to talk about reversal strategy. The reversal strategy is, what do you see that will tell you that, okay, good, I'm fine, I've made enough, the market is turning, I'm out of it. Or you can even take a trade in the opposite side. We can make money when the market is going up, and we can make money when the market is going down. We don't care. Even let the stock market go on fire. In fact, it is when the stock market goes on fire that we make money, because what we're looking at is we want the market to move either up or down. Our job is to get what the direction is, come up between law, either up or down. We are not predicting. No, that's not what we're doing. We are reading the market, as I said, candle for candle. When the market opens, we look at it. What's the sentiment? Is it on the long side or the short side? Is there any news? Market opens at 9:30. At 10 o'clock, news hour. At a time when they're having news, you want to get out. If you're in a trade, you want to get out of the trade because market can be volatile. News will answer. We're talking about any news. We're talking about jobless claim. We're talking about PPI. Yeah, I think it's called PPI in the US. So I'm out with dates in key market to open. When the news is coming, we get out. Volatility comes in. We'll take advantage of it after the news. You either buy the news, buy the rumor, or sell the news. Before the news comes out, quickly sell it and get out. So today, what we're talking about is reversal. So back to our study assets, SNDK. I'm going to show you the entry I made on SNDK. I'm going to show you I got out early, but I want to show you how we can look at the market and say, okay, the entry, the exit, the top has been reached, and we are getting out of the market. Let's start that. Okay, this is SNDK. Now, for this strategy, it was supposed to be 5 minutes opening range breakouts. That's for entry. So what do? The market opens, right? Once the market opens, I wait for the first 5 minutes candle. Once the first 5 minutes candle is established, I do this. This is the routine I go here and I mark it and I lock it down. So once I do that, I'm looking for the pattern, the behavior of price within this 5 minutes range. If it breaks out, I buy. If it goes down, I short, right? If you look at this trade, we're going to recreate this trade. I think we recreated it in one of my last video, but I'm still going to talk through it, but this is not the key thing I'm looking at today. Now, price dropped. When it dropped, my strategy is 5 minutes opening range breakout. Once price closes below this 5 minutes candle, I'll go short. And yes, I went short here. So price open. Let me get my drawing tool. Price open. I put my stop here and I went short. But price turned back and crossed the VWAP. And this is a decisive volume. At a decisive volume, this is the average volume. It is above average volume and is higher than the last volume. That means there's a change in direction of the stock. You do not. This is not a hope game. You do not hope that the price will turn back. No, it doesn't work like that. You get out of the way. Your thesis was wrong. So I got out of it and took another trade in the opposite direction, which I had raised my arrow or the green arrow up. I can't find my arrow. Okay, anyway, I took a trade. Is it this one? No, it's not. Okay, I took a trade up. So that was my entry. It went up, and I think I took some profit here. I took some profit here, and then it stopped me out. But what do I want to do now? What I'm trying to do in this trade is I want to see how I could look at this stock and say, okay, as long as certain conditions are true, I'm going to keep on holding. And when that condition falls, I exit. And what's the condition I'm looking at? Okay, I took the entry here, went up, 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 right? When it came down, I want to sell as soon as it crosses this line and possibly take a trade in the opposite direction. What am I saying? We can make money when the price stock is going up or going down. So when it goes here and crosses there, I take an entry, I buy. As it goes up, we don't know how far it's going to go. It can go all the way from here to here. That's our wishful thinking. That's what we want to happen. And it does happen. So, but in this case, that's not the case. Open. O lọ sókè. Síbí. Then ó wálẹ̀. Síbí báyìí. Then ó tún lọ sókè again. Báwo la ṣe lè hold through all this move? And ibo la ti fẹ́ sọ pé okay, ó ti ń go the other way, ká exit. It's easy fún wa láti sọ bí pé oh, tí má ra mi, tí má débi, tó bá ti débi máa cut ẹ̀, because we are looking back in time. But in real time, and actually make decision. So that's what we want to do. Now, this is the strategy I'm trying to develop now for reversal. I get a good entry. Your entry is paramount. As it goes up, I take some off the table. Maybe I bought 100. As it goes up, we call it 1R. I'm risking 250 to make 250. Once I make 250, I sell half of it, right? I lock my profit in. Then it goes up. For the first candle to go red on the 5 minutes, I sell half of it again, 50%, right? Then it came down and bounced off, and I got another red candle here. I sell another 50% again. I sold 3/4 of my position, hoping it's going to change and go up. Well, in this case, it didn't go up. It crossed, once it crossed this thick black line, which is the 20 moving average, I'll sell all the position. But if it goes up again and cross above the 20 EMA, I'll buy it again. That's the next leg up. So let me demonstrate it. But what we are trying to really get now is, how do I identify a top like this and then capitalize on the move down? You can see it went up, came down, went up again, and then smashed down. Now, this is what we call it retesting. Let me take this out of the way. We call it a retest. Okay, let me show you what I'm calling a retest. This is how you know. Your price keeps going up. When your price is going up and your MACD is positive, we say we are on the front side of the move. We are on the front side of the move. So price is going up, MACD is positive. Now, when MACD turns and is in this negative side, we are already on the back side of the move. Now, to anticipate the reversal, let's assume, let's assume we didn't have this pullback and it was just going up straight. How do we know when we have peaked? How would you know this is a peak? You cannot know. So there's a strategy we call mountain pass. What we're looking for is, we're looking for price to rise, right? I'll show you price to rise. And when it gets to the top, it pulls back. So as it's pulling back, we are taking some profit off the table. So maybe we're taking 75% of our stock off the table. Now, if in this case, I'd sold when it got to this stage, let's assume it went all the way back up as it did here. We are waiting for it to hit the top here. And anytime you see this rejection candle, trust me, more often than not, you will see a rejection here and retest. But in this case, it blew through it, which is good. And it blew through it on high volume. That is convincing. So we let it continue going. Now, again, it got to this top, right? As the price moves up, we'll be moving the top. We'll be trailing the top up. We are looking for a point where the price will get to the top, rejects down, comes up again, try to retest that top, but failed. That is the first condition of a reversal. Sometimes it will drop by, right? And then bounce again. It will do this. Let me use this. Okay, this is a good one. The price will go up, come down, up, and down again, right? And then it could go up again. But in this case, it went up. It did not breach the top, which means it is weak. And how do you see that? You will see that in the MACD. The MACD was already negative. Even though the price was making a new high, the MACD was negative. So here, the price went up, came down, tried to retest again. It couldn't go that far, and the MACD was negative. So that means we can't make it to the top again. So what do we look for? Once that fails, that is confirmation number one, because it could come back and go up again. But once that fails, that tells us, hey, something is happening. And we have 1, 2, 3, 4, 5, 6, 7. 5 times 7, 35 minutes. So it's not something that happened all of a sudden. The next thing is we're waiting for the price to breach this 20. Once the price breaches this 20, that is our confirmation. Most especially if it does that on a high volume. Let's look at the volume. This, you see, look at this volume. It's almost twice as high as this too. So that's telling me that the structure has changed. So at that point, I would go short here, right? risking maybe $250 and putting my stop all here. So I will go short at this point. I will short it at this point and then watch the price drop. Okay, so that's what we are trying to achieve. So let's replay it and I'll explain it candle for candle as we do that. Let me see. Okay, now we're going to replay that. So this is before the market opens. We can see there's a selling pressure here telling us that, hey, it looks like this market is not going to hold, it's going to fall down. So let's play. Start. See, high volume sell. Then we have a buy. We have a low volume sell. Market opens. So this is the first 5 minutes candle. This is the first candle you see. If you look at this candle, you will see it closed well at the bottom. So ideally, I will short this trade. So this is my 5 minutes opening range breakout. So 5 minutes opening range breakout, Mary. So the strategy states that if the price goes up, I'll buy. If it goes down, I'll sell. So let's watch. The next candle went down. At this point, I would have put in a short because this is a 5 minutes. Maybe at the second minute. In fact, as soon as this candle, 5 minutes candle closed red, no questions asked, I'll put my stop here, risk $250 and short it. Hoping that if the price goes against me, once it closes above this blue line, which is the VWAP, I'll exit the trade. So let's play. Negative. Let's see next candle, green candle. So this is a warning shot telling me that condition is changing. But for me to say, because stock doesn't go up in a straight line, it goes up and down, up and down, up and down. So what we do is we look at the price of the candle in relation to the volume. The selling volume was high. And when you pushed up, the buying volume was although above average, but it's lower than this candle. So nothing to fear, really. It's just people either taking profits from the short position or saying, okay, let's position ourselves for the long. Let's wait for the next candle. Now the next candle went in. If you look at my last video, I actually traded this, simulated it, so I don't want to go through that again. This tells me that my thesis was wrong. Second candle was full green candle, full solid bar with a volume higher than that, so I'm out of it. So here I will take a long trade. I'll get out of the other one and take a long trade. So let's assume I'm in. Let's continue to play. Here we're thinking about we're looking at the reversal trade. So it's not entry, but this is the premium entry point. This is the kind of entry point you're looking for. Your price just closed above the VWAP on a higher volume. That is a confirmation of trend. So let's play. It goes up. That's good. So next 5 minutes we're good. Whoa, there are two things in this candle, right? We call this a shooting star. That candle went up, huge volume, twice as much as this. But you would see that it rejected. We call this a rejection. So even though that candle volume was high, this shut down, the price retraced 75% of the total volume, of the total price bar. So that tells me something is changing. So here on this candle, ideally, I would sell, let's say, 50% of it. I'll sell 25. Let's sell 25, right? On that candle. That's how we should trade. Then watch for the next one. We've locked in some profit. So this is obstructing my view. So we play. The next candle should be a red candle, but it was a green candle. Nobody can predict the markets. So, which means, okay, we're still fine. Back up, play the next candle. We could have a rejection here because you see, this is a strong selling point that pushed the price down. So when price gets to that place, anytime you see a shooting star like this or like this, you expect a rejection at that place. Let's see what's going to happen. You see, price came down and then went back up. Indecision candle. I would have loved if this was green, but it's red. So that tells me there's weakness, high volume. So let's continue watching. Green again. Still going up, coming down now. But this is a low volume sale. So we are fine. There's nothing to worry about. Now it's high volume, but it bounced off the 9 EMA, which is fine. It went up again, but not enough volume. So prices still drop, kept dropping. Kept dropping here. Normally, I'll take half of the table again because I can see there's weakness in the market. The volume is not moving up that much, right? Also, MACD has crossed there, so there's weakness there. Then the price bounced off this, as we can see here. But this is the area I want. This is the trade we are trying to address. This is the strategy we're trying to, it is the reversal strategy here that we're trying to capture. So in this case, I would have exit the market, waiting for another setup. There's a bounce here on a higher volume. I'll wait for the price to close above this, this one, that's it, and I buy here. So let's say I came in, I saw that on this bullish candle, and I bought there. So I'm in, right? Let's continue playing. Volume is rising, that's good. We let it go. Next volume is green and rising, that's fine, no problem. Even higher, that's green, no problem. Now red candle. But if you look at this red candle, this is a good red candle because it was red below average and they bought it back up. Now the next one, is that a red candle? Yes, it's a red candle, but price did not change and it did not make a new high. That is a lower high and a lower low, telling me something is changing. So if it breaks this candle now, I want to sell half of it. Play. Now it broke that candle. I was sold out of it, out half of it. Now this is what I want you to see. This is what we are trying to address. Price came up here. You're looking at the same thing here. So we are looking for a reversal. So every time we get onto a new high, we move this line up. That's a new high. We are waiting for a retest of this. So let's play. price drops, I would have sold half of it because it dropped down here and wait to see what happens. Came down, pin bar. This is a strong candle. I'll buy it because of this strong candle, really. I would have bought here, put my stop here. Let's watch. Good, it's going up. It's going up again. That's good. Now, it went up twice, right? But it could not break, it could not get it to near high. And if you look at the MACD, is already negative here. So once the MACD is negative, the weakness is there. That tells me, hey, things are changing. So let's continue watching. I'm waiting. I'll take some profit here because it's hesitating. I'm waiting for the price to break this line and then I will close my position. It's coming down. Broke that line. That's a decisive break. Look at the volume. The volume is strong and this is low. So the pattern has changed. So I'll close my trade. Actually, I want to close it, yes. And I'll take a trade onto the short side. That's how we should trade it. Short side. So trade. My stop will be here. So I'll be risking $250. And the price continues to drop. Now I'll be waiting for the price to come all the way down and bounce here. This is the VWAP. You can see the volume is decreasing. So there's no buying volume. And we're having more reds. So yes. So it's dropping again. We expect a bounce here. This is the VWAP. People who short it here will be covering their position, and some people buying, hoping it's going to go up. But this is already weak. You see, it bounced there. We expect a bounce there, and it did bounce. But is it going to hold? No, it's not holding. It's coming down again. That's it. It's gone down. Price kept dropping. So what would I be looking for here? I'll be looking for price to either close above here to get out of this trade or flush down. Now, here I would have gotten out of the trade. I would have said, look, enough. I have enough money, but it turned back on me again, which is good. But normally what we do is we don't sell everything. We always sell half or quarter and leave quarter so that it would always be in the trade till the end when it takes us out. So that's how to manage our trade. That's it. Still going down. So if I was still in this trade, I'll be making money going down. So you don't have to necessarily be trading up to make money. You can be trading up or trading down. Now I'm trading, I see that's a big dip. That would have made a lot of money on high volume. That's it. The market is about to close. They're dumping it. And that's it. The market's closed. So that strategy is called mountain pass, right? So it's like a mountain, it goes up, valley, it goes up, but couldn't get to that top again. And the MACD is already negative. So the setup is there. Once it breaks the 9 EMA, 20 EMA, you short. That is golden. Thank you very much. I would review another video again. This is 30 minutes. I'll have to keep you a 30 minutes video and keep you posted. All right. Thank you.